The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
So what do we have? S&P's off 1, Dow's up 31, NASDAQ's off 22, Russell's off 2. 2721.82 on the S&P for the last tick is what I have on the cash. I suspect we've probably made our high through expiration week. We might test this next Friday or late next week, but my guess is that we're going to have some kind of pullback. That pullback could come back to 2650, maybe 2670. I'm not, maybe 50, 70 points down. Could we get a rally at the end of that? We could. This looks to me a lot more like the expiration that we had last month than previous expirations. It's rare to see that we close below the high of Wednesday, the week before expiration, but that would still put us down there at 2670 or so. So no big deal on that. It would be bullish over the week, but not bullish over the last few days. A lot of stocks looking just extremely tired and having fairly light volume. So we could have a light volume pullback all the way through next week. I'm not playing any particular index, but I do think that there are some stocks that look rather interesting. So we're trying to fish into a couple of those positions today. Might not be, may not get them today, but I think we'll get them Monday. So got to let them come to you. Don't want to go out on a limb here on a Friday, but certainly volume has turned light. It was light yesterday. When we look at volume today, let's get this updated on the CBOE volume. We're basically turning 3.4 billion shares, so very light push higher. Don't think that there's a lot left to the upside. The risk is to the downside. How much, I think a lot of people could argue. I just think we've been in this trading range for a while, and we're going to be in it for a little while longer. So not a whole lot coming out of this. Anyway, looking at trying to buy puts in the daily newsletter, cleaned up our position yesterday, and looks like the right day to do it from looking at price changes today. So I've got one long-term position in the in the Tech Insider, and that's about it. Trying to find a handful of these stocks that'll pull back with not that much, but if they do pull back, we're looking for 4 and 5 to 1 odds on them, and we'll be talking about that on the webinar next Wednesday night, if you haven't heard of it already. What else is going on here? It's just light volume, push to the highs. It's Friday. Could we have a little bounce Monday morning? I think we could, but that probably is a bounce to be sold. But we will see. I'll have a lot more information tonight. Get to spend the weekend looking through options and seeing how that works out. So what else do we have going on right now? Well, a little bit of history, and then we'll get into some charts.
And it's all just a little bit of history repeating.
On this day in 1934, a massive storm sends millions of tons of topsoil flying from and across the parched Great Plains region of the United States as far east as New York, Boston, and Atlanta. By the time the Great Plains were settled in the mid-1800s, the land was covered by prairie grass, which held moisture in the earth and kept most of the soil from blowing away, even during dry spells. By the early 20th century, however, farmers had plowed under much of the grass to create fields, and became the Great Dust Bowl of 1934 on top of the Depression. And what else do you need to say about that? We're going west to California with the grapes of wrath. What else is there? That's it. Option Seminar Wednesday. I guess we can start off with some charts. And on that vein, we were talking to a few people yesterday, basically anybody that was listening to the show. We wanted to start talking about what we were looking at in the options curve. And we said we go ahead and start looking at it. Now, again, don't jump to the conclusion that the wheels fall off the wagon instantly. Let's zoom in here a little bit farther. But the bias in options is down. Now, I'm going to get into this in depth next Wednesday night and tell you the secret sauce, or at least how to make the secret sauce. But basically what we're looking at is a range from about 268 on the SPYs down to 258. 258. Now, my guess is this is going to be on the high side. You always want to add somewhere between 2 and 4, sometimes as high as 6, onto the SPYs option curve, because a lot of people are highly short these things, and that skews this to the high side. Somewhere between right now, between, I'm going to say 3 and 4. So that would push the center up here to about 2064, 2065, which is where I get my prediction on where this thing could pull out. Now, what happens is these tend to track into expiration. So every day that the market holds up a little bit, you want to move that number up a little bit for expiration on Friday. So these two numbers will converge. How much they converge and on which side it has a lot to do with the way the option market makers decide to move the cheese all the way into expiration on Friday. But again, as I can say, probably 90% chance that we've hit the highs of the next week, and probably a 75% chance or 80% chance that we close much lower than today. And by much lower, I mean 20 to 40 points on the S&P cash on the 500. So, yep, still have some up and down in the market. And of course, if you're bullish, the best thing that could be happening to you is a light volume sell-off all the way into the Memorial Day weekend. If you're bearish, the best thing that could happen is the market continues to push higher on light volume all the way through that Memorial Day weekend. So pick your poison. But I think we're going to have a fairly good indication by the time we get back from Memorial Day, which was the weak side and what was the strong side on the market. You can give me a call at 877-927-6648, east of the Rockies, west of the Rockies, 877-927-6648. And, of course, you can always email me at path@tfnn.com. What do we do next? Well, we're going to look at the QQQs. We're going to talk about that, too. Right after this exciting news from some of our sponsors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we said, I don't do a lot on the QQQs because guess what? They are the most inaccurate poll of what NASDAQ's doing. What is it? Apple's what, 16.5% now? Something like that. Of one index, leaving less than 84%. And of course, 60% of them are the top 5 or 6, top 6. 60% of the NASDAQ's 6 stocks, leaving 94 stocks with less than 40%. So I don't think that they're very good, but at this point, as I'm showing you the curve on the QQQs, cuckoo, what was that song? Sounds like Rhyme and Simon, doesn't it? I think it does. Cuckoo, 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 cuckoo. Mrs. Robinson? Maybe. Have to think about it. Okay, so what do we have on this? Well, you've got a fairly decent curve. My guess is that this also could be, the Qs could be down 40 points, 4 points in the coming week, and that would bring them back in. Again, a lot of people are short the indexes, so you kind of have to put a fudge factor on the top of them. The one that kind of makes me scratch my head the most on the upside is Apple. That is because this thing, which has been historically extremely accurate with these methods, shows much lower, which is down into the 175 range. So I don't know of any news coming out that would get them, but you know, what are they at, 188 or so today? Again, these track together. So let's say just pick something in the middle between these two, 190 and 175. So that gives you about 182, right? About midway on the line. That would be kind of that 180, 182 area is where you have a kind of a tick up in the way these things, kind of a little bit of a hockey stick in this. And I would not be surprised to see Apple back down into that probably at a minimum 185 and a maximum down to 180 over the next week. That could probably do all the damage it needs to in that. But Apple, fairly far extended. A lot of people shorted it on the way up. I think now we've had 3 or 4 days for these guys to figure off that it's probably not a good idea to short Apple on the way up. You may want to short it on the way down. We might get that, but the Buffett effect, maybe it's over. Hard to say. Anyway, if you want more charts in the way of options expiration, give me a call at 877-927-6648 or email me at path@tfnn.com. And, of course, we get to play a loser horn today. And that loser horn goes to Symantec, the worst day since the dot-com bubble burst in 2001. Symantec, we're not talking semantics. We're talking about real dollars here. And let's see, what is this off? 33%. That's quite the haircut. And, of course, you're going to have boffo box office volume on this, and it blew everything out. Let's just keep going back and see how far we can go. Well, it's just blown through everything, including these highs around May 15th in 2015, May 23rd in 2015, August 7th in 2014. That was 1970. You're basically back down here and supported at about 16 bucks. What do we do here? Okay, so this thing's up about 20 bucks. So you went through that. You did pierce it. That is kind of the initial support area. Resistance will come right at 21 bucks. So you don't have that much upside on this thing, even if it does bounce. My guess is that this will have a long, long summer. That would be it. We have Rich. How you doing today, Rich?
Good. Thanks for taking my call, Dave.
What would you like to talk about today?
Vasco Data Security, VDSI.
You know a lot about this company?
Well, a little bit. They are in the data security, identity, etc. And I just noticed their chart. They got some life starting in April. Yeah. And the chart really turned different. It looked positive to me starting in April. And
yeah, you had a breakout at 18. Yeah, you had the breakout at 18 bucks on the 9th of May. So what are you thinking? You long this already?
Yes.
Okay.
I'm wondering whether I should stay in it.
You know, this is the strongest sector in all of everything. There is no stronger sector than this one. Do you watch Hack at all?
Yes, I do.
Okay. This thing's probably had a little bit of short-term top in it. At what point are you long? The other one.
I got long about 17 something.
You know, I don't until this thing breaks a uptrend on this on Hack. I don't think you can sell it. I think I looked at this a while back. I saw the breakout, and I've got an alarm set here at 1725. And if it hits it, I'll probably be a buyer.
Okay.
So good-looking stock until I've got a long-term hold in this sector too, and until you don't open up the paper or turn on the TV, and the first thing is yet another hack, and everybody's Social Security numbers being stolen, I don't know if you can go wrong in this sector.
Well, that's what I'm thinking. But after what happened to Symantec today,
I don't care how bad the general market gets. I think this one will hold up. You're going to have some kind of drastic change in what's going on. But even now, just the last couple of days, we've gotten a little bit of juice. If Symantec hadn't eaten it today, I think this thing would have been up yet another day.
Well, that's what I thought, that it's down today just in sympathy with the sector getting hacked by Symantec.
Yeah, Symantec's a horrible company, and And a lot of these guys are going to eat their lunch. And the only thing is that a lot of these companies are in that same index, so they're going to get sold with it. So, you know, they've all pretty much gone through their earnings cycle now. They all look fairly decent. There's probably going to be a bit of consolidation. And the question is whether or not you're in the stock that gets acquired or the acquirer.
Well, and that's what I was thinking was I thought Vasco might be in stock that gets acquired.
Well, this one's kind of one of the things. There's several sectors out there, but one is a thing called identity and computer security. And it's a way of saying, hey, I absolutely know that the person on the other line is that person. Now, Microsoft is its next big push in this whole sector is identity. They want to use LinkedIn and the rest of their stuff to put together a profile so they really, truly know it's you. You want to hang on through the break?
Yeah.
Okay, we'll talk more about computer security. Man, it's like listening to the news and seeing a bank robbed every single day. How could security not be a good business to be in? We'll be back in a minute.
Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back, hopefully, with Rich. Did you make it through the break?
I'm here.
Okay. There's a lot of different parts of security for corporate and end users, network security, something they call edge security, which is on the kind of the moat around corporate web services and networks. Now, this company has a thing called DigiPass, which is kind of a technology. I don't know how long you've been around, but there used to be dongles that you would have to plug into your USB or DB9 ports or mouse ports or something to get software to work. These are kind of a high-tech, almost blockchain version of that. And that's really the claim to fame for this company is this DigiPass software. They also have a thing called IdentiKey. But all these companies are all over this authentication thing so that you know the people on the other end. The CIA have a technology that they developed with a guy. Did you ever see the movie Catch Me If You Can?
Yes.
The
Cool
real
movie.
The real guy, although it has nothing. Apparently, the guy, he's got a thing on YouTube where he says it wasn't quite like that. But you didn't expect that with a movie anyway, did you?
Gee, I trust Hollywood.
So anyway, that guy had worked with a deal for the CIA, so they can know that that person on the other end is actually the CIA guy that they want to be talking to in a foreign country and not somebody else just impersonating them. That kind of technology, a lot of those different versions of that are all kind of making its way. But the authentication is probably the biggest thing besides just protecting the castle. You know, you want to know that the people on the other end are the people that should be using the credit card, that kind of stuff.
And that's where I thought Vasco had a lot of customers, or a number of customers in banking in particular.
Yes, that's their strength is basically authentication or identity. They kind of use both terms loosely in this area. Some people are really good at stopping intrusions. Some people are really good at, in fact, there was a recent IPO I had in the Tech Insider that I liked because they were very good at, they were kind of the CCTV thing, right? Where if somebody broke in, they could go back and reconstruct everything that they did, no matter how, I think for like the last 30 days.
Wow,
So,
forensics.
Right. So there's forensics in this sector. There's authentication. There's basically the outside moat. There's the Praetorian Guard that protects the the crown jewels inside. And there's the kind of the second layer kind of companies that are much better after the hardware firewalls. There's a lot into it. Most people. In fact, I was talking to some lady, I don't know, maybe it was a year or two ago, and one of the things that I built at my company back in the 90s, after we built a digital disc recorder for television in Hollywood for animators and special effects, we took the technology and turned it into a replacement for the traditional VCRs in security. We called it the Digital Detective. I always loved that name. You can, if you Google it, you'll find a picture of it. But we sold a bunch of those to banks and a ton of them to convenience stores because you could. This is way before, this is in like mid '90s. Way before you could dial in and see what was going on inside your store. You could do that. You could, download all the video footage. It was a very neat system. We were the wrong company to sell it. Ended up selling it to another big company called Geyer, if anybody's in that industry. But, man, now I've lost my train of thought. Oh, there's just a lot of business in that security. But the thing that really made that business go in the convenience stores was a change in laws and the insurance companies. The insurance companies would no longer cover anybody if they didn't have CCTVs. And once that insurance requirement came in, everybody had to start buying them, even the mom and pop stores. And that's when you really saw that business take off, which was like in the late 90s. I think there's kind of the same thing going to happen in like credit cards and the rest. There's probably going to be some kind of event, and that's going to make this thing be 10 times bigger than it is now, where literally people have to spend money. They just look at it as the same way that, well, let's say casinos look at security. They don't shy away from paying money to secure their stuff there. But everybody else, it's the absolute last thing that any CEO wants to spend money on. And that attitude's going to have to change. And the way it did in that CCTV business, when the insurance companies required them to have them or they couldn't have insurance, I think that there's going to be some kind of tipping point like that. But yeah, I looked at this company before. The thing is that there's probably going to be one company that comes up with something really good. I don't know when that's going to be. And there's going to probably, this is kind of like the early days of a lot of computer companies where a lot of them can make money, and then someone really is going to outshine those people. I just haven't found that someone's going to – I have a company I think that's best in this, but it's not been proven to the world yet. Let me put it that way. I think it's going to take a while till everybody else figures out which one it is.
And you're right. You need some big blow-up to finally make everyone – realize they have to adopt this to protect them.
It's not a second thought. It is a first thought. And we've kind of seen that we got Facebook, dragged before the Congress. We've had a couple of companies get dragged in front of Congress on this issue a few years ago. I think it's just the next big one will be it. And that will be it. A CEO just would rather have a little less in his profit on the quarterly call and not be dragged in front of Congress on why all their data just got dumped again. In fact,
now, the company that you like, is it considered, like Vasco's considered a small cap growth?
They're all small cap. I don't think any of these companies are big except Semantic, and none of those companies are any good. They're all, Semantic, I think they've been around for so long, they really just have a kind of an old culture. You really need somebody that probably either came out of military command for dealing with threats, or you need somebody that was an ex-hacker, right? And the Semantic people just very much impressed me as the kind of people that have been in a business for a long time, just expect themselves to be in business for a long time. They're kind of the IBM when PCs came along. It doesn't come to them naturally to know that maybe they're an endangered species.
Well,
thank you for the
I'm
call.
going to hang on to it for now.
You bet. I would.
Okay.
Yeah, a good business to be in. We'll be back. We'll look at a few more charts. Thanks for the phone call.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And of course, probably the biggest chart of the day is this XLK chart with a fairly decent looking Gartley in it. On the X to A, you had a 9.3 on my power law vector indicator. On the C to D, you've got a 7.4. So energy's off 15, 20%. There's a lot worse out there. So it's not like this is the end of the world for the XLK. But what you do have is, I mean, you didn't break the B point, which had 15 million shares. You broke it with 13 million shares. Is that the end of the world? No. Yesterday, you went up on 11.5 million shares. Today, you're starting to get a little bit of that reversal candle. So could you certainly come back to 68.29 at least for just a test? And that's kind of where I'm looking at now, that you could certainly get back into that candle and in that trading range for next week. And I don't think it would take much. I don't know if it's going to be on Monday, but Tuesday, Wednesday, my guess by midweek, probably going to be back in that 68.29 area on the XLK. And then that sets up the rest of the move. I know everybody wants to get all huffy and puffy, but actually, this is going to be a bullish thing if we do start heading down and into that Memorial Day weekend on light volume. Certainly the volume is going to probably be good maybe through Wednesday next week, and then it's just going to, every day, we're going to get set up for that summer trading volume, which is going to be lighter. And that's going to take you all the way into that Memorial Day weekend. So if you continue to pull back down and volume's lighter and lighter and lighter, that really is kind of the point where you can start looking at a June rally. So again, even if you're short-term bearish, to be long-term bearish, you really want the market to go kind of the opposite way that it kind of looks like it's going to go next week. So we shall see. This is like the weather. If it starts raining tomorrow, I'm not going to stand and tell everybody it's not raining. But it certainly is a certainly interesting chart. There's a handful of others out here that I've looked at, but we'll see. Of course, everybody thought there was going to be a lot going on in the IBB. You got at least a little bit of a push up here today. Now, part of that is the speech that came out of the White House today. Doesn't look like really a whole lot, but this did get back to the resistance level of 106.20 today. That goes back to the highs of April 26th, 27th, and 30th of last month. So you're basically into that where it just started to come down. Now, in those days, you kind of came down with three and about 3.2 million shares. Today, 2.7 million shares. So actually one of the stronger sectors out here when a lot of them seem a little bit weak. Question to look at the SMHs real quickly. This is where you're at the strongest resistance that you're going to get in the SMHs, and the volume stinks. Down today on the 19th, or excuse me, we're down through this gap down on April 19th that had 16.5 million shares. Yesterday we had 4.7 million shares. Today we got 3.6 million shares. There's not a lot of appetite, I think, to get out on it, and actually a fairly bearish looking movement in the SMHs, and that is if you look at the April 17th high to the April 25th low up to this high today, my power law vector indicator number was down on 7.4 and up on 5.1. You've got a fairly untested low on this April 25th low at 95.47. And could we just be in a bigger trading range? I think the answer is yes. We've gotten to what I was looking at, which was these kind of midterm highs out here. But that's kind of it for the moment. You can, let me check my email here. Okay, was that it? Okay, we looked at SPYs, the QQQs. So there you go, Curtis. Okay, Tech Insider's already out. Okay, this guy, and okay, I want to save that. What else is going on? Okay. Let's go ahead and bring up some of the other ones I was looking at. Okay, let's do this. I'm trying to remember which ones I was looking at. Let's look at Twitter, the Twitter. Now, this one came into yesterday's, or not yesterday. Yesterday, this came into April 20th high, $33.12. $34.20, 34 million shares. Let me slow down a little bit more. April 20th, $33.12, 34 million shares. Got into it yesterday with 20 million shares on the Twitter. I'll be like some of those senators. The Facebook and the Twitter. I was talking on the Twitter yesterday. Anyway, not a whole lot out here now. There weren't enough days to get a really good reading on this move down, but you certainly had a high volume low that was untested at 28.14. So you got that. See out here, a question about Tesla. I see out here. Oh, I wouldn't be able to play that yesterday.
You served me well, hybrid. But still, you burn some gas, and so...
You disgust me. I always love that. Anyway, Tesla, question is this thing going anywhere? And I don't think so. I think it's going to hang around. Again, massive short position. You got a little downside out here today, but if there's a stock that's going to hold up because it's way too short, it's Tesla. My guess is that part of Tesla holding up has been the crude strength. And of course, we found out last night that we had the Saudis were going to start pumping a lot more oil. That means everybody else is going to start to cheat. So I think we've had a kind of a midterm move here in, what is it, OIS? OSI. It's the other one, right? I think we've had kind of a midterm high out here, at least for a little while in crude. Is it OIS? OSI. There it is, Oil States International. This thing's been going sideways here for a handful of days. My guess is that this thing, you had your big move, you've gone sideways for what is this, 8-10 days. You got light volume out here today. My guess is that you could see this come back in a couple of days, back down to the $34 level in OIS. And all you need is to look at those Baker Hughes numbers. Every week they're adding more and more and more. The traditional thing to do is they keep adding more supply, more supply. Eventually, the market starts moving down, and everybody's been adding supply, and it evaporates the move down into these. But I think you've had your big move in crude. Today, you're probably seeing people getting crude for the weekend a little bit, for a little bit of danger. Monday, this thing starts moving down. Look for down to $4. So look for OIH to move. We'll be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And see, question of the market behavior since March 23rd is fit your reads well now. The SPX, DIJ, NYA all sideways, and Apple, Microsoft, Facebook, Amazon, Adobe all at highs, looking past June 1st. Does your work suggest SPX do anything decisive like a leg lower or rally to new highs? No. Everything looks to me like we're still in this big trading range. and that could go down to 2610 on the S&P cash, up to kind of where we're at, which is that 2750 area. As we pushed up into that today, looks like we failed at that higher end, and now we're going to go check the lower end. But my guess is at each day the volume's kind of drop out. We're probably going to go just a little lower on lighter volume. Maybe that changes. Maybe volume comes in next week, but everything starts to look to me like volume continues to decrease a little bit every day, even though with the market action, both and up and down should be advancing at least on one side or the other, and it is not. It's just shrinking on both sides, which makes me think we're probably just getting ready for summertime volumes, at least in the midterm, after a number of days, 4 or 5 days, if you're averaging it that way. So NVIDIA had their earnings last night. Probably the most interesting thing is that they said that they did $300 million in Bitcoin mining business last quarter, and they're losing 2/3 of that, and the stock's down $5. I think that's probably more interesting than anything else. I do think that over the next week, this thing could get back down to the 245 level. So, if you were long this thing, I think, it's probably time to ring the register, wait for the next setup, and see what happens. They're a monster, but that doesn't mean that monsters don't pull back. But I think the big weakness could come from Apple, could come from maybe a handful of other companies. But I think NVIDIA is probably pretty strong. Apple looks probably the weakest of the bunch to me. We'll be with Tom O'Brien in the next hour. In the meantime, sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.